Good day, viewers. Welcome to the 5th edition of the KPMG West Africa Doing the Deal podcast. My name is Ijeoma Emezie-Ezigbo. I'm a partner and I lead the deal advisory practice in KPMG in West Africa. Our guest this morning is Obafemi Ogunleye. Obafemi is a senior investment manager with Norfund, and Obafemi has over 16 years of experience in investment banking, corporate finance, and private equity across sub-Saharan Africa. And it's a pleasure to have him sit with us today to speak about his experience investing in the region, the lessons learned, the challenges, and just sharing his wealth of experience with other potential investors seeking to do deals in the region. Thank you for being with us today, Obafemi.
Thank you so much for having me.
You're welcome. So thank you, Obafemi. Maybe you want to just do a quick introduction of yourself, what you do at Norfund, and also a bit of a background on what Norfund is really trying to achieve in sub-Saharan Africa.
Of course, and thank you again for hosting us. I joined Norfund a couple years ago. Norfund was set up about 28 years ago, actually, fully owned and funded by the Norwegian government. And we like to say, and it's true by the way, that it is the Norwegian government's most important tool in supporting sustainable businesses across the world, creating jobs and fixing this poverty issue that we have globally. In West Africa, we have offices in Ghana, which is where I'm based. From Ghana, we cover Senegal, Cote d'Ivoire, Ghana, Nigeria, and then we've recently, I would say, adopted Cameroon, which is technically not West Africa, but close enough.
Sure.
Outside West Africa, we have offices in Nairobi and Cape Town, covering East and Southern Africa respectively. And then outside Sub-Saharan Africa, we actually have offices in Bangkok and Costa Rica respectively. So it is supporting developing economies globally, across key sectors that we've identified as very critical for growth and development. Those sectors include renewable energy, financial institutions, agribusiness manufacturing, and an interesting sector that is kind of new for us called green infrastructure. And it's across those sectors that we try to implement our mandates in the region. As you rightly mentioned, I'm an senior investment manager at Norfund. I cover Anglophone West Africa, which is more Nigeria and Ghana these days, across those sectors.
Sure. It's quite interesting the way you've also looked at the sectors in terms of the most impact. If you can speak to how you have prioritized the sectors.
Yep.
And how you look at the sectors, especially for West Africa.
Yep.
How do you decide on the countries to invest and what particular sector of your focus at any particular point in time?
I mean, on the countries that we decide to sort of focus on or invest, this is the Norwegian government's idea of making positive impact globally. So it is developing economies that need support, that need sustainable businesses to function. When you have sustainable businesses, they create jobs. When jobs are created, poverty is solved for lack of a better word. And it's just that simple. With the sectors, if you look at renewable energy, for example, and you look at a country like Nigeria, where businesses will tell you that the cost of energy or the lack thereof is a key hindrance to success of their business. If you look at agribusiness and manufacturing, we're talking food, getting food from the farm to the fork, as they say. When you think about green infrastructure and recycling, we're talking about the circularity of the economy and waste. And then, of course, when you think about financial inclusion, it's also getting financial services to those who need it the most. And so that is how we've sort of thought about it. It's countries that sort of need that support and have the necessary resources, but also sectors that ultimately impact the development of the economy quickly.
Sure. So, I mean, we try to dimension some of the investments that you have made across these very key sectors.
Yep.
Whether it's sundry foods in the food value chain,
yep.
Energy, renewable energy,
yep.
the mini plasts,
yep.
and FT and cocoa in agribusiness.
Yep.
When you look at how you have gone about those transactions, what would you say the key lessons that you have learned? Just a bit of walkthrough on, we call it journey behind the deal making.
Absolutely.
How you came about with the investment thesis, the follow-through in terms of the investment process,
Yeah.
the key challenges and the key lessons?
Yeah. No, I think it's a good question. I think, for us, prior to 2017, we started to invest in the region as Norfund. But our West Africa office was officially set up around 2017. And our regional director, Nana Winful-Finn, she's done amazing work sort of building the ground infrastructure as to how we've been able to cover the region, from pipeline or origination building to partnering with advisors such as yourselves, and even building those relationships with the folks that we want to partner. And so when we look at some of the deals that we've done in this space, I would say that it has been on the back of having an on-the-ground presence in these markets. So if you look at the team in West Africa, for example, it's Nigerian, Ghanaian, Cameroonian, all of these folks who have a strong wealth of experience, understand each of these countries. For us as Norfund, you eat what you kill, so you originate it, you build that relationship, you go through the execution process, of course, with big support from the teams, not only in Oslo, but across the region. One thing we do very well also is sharing learnings from multiple jurisdictions, right? But I think that some of the transactions you've mentioned, for example, are transactions that we're very proud of, that are making significant impact. When we look at some of these opportunities, we want to support businesses that have track record. So we're not set up to do early stage stuff. Sure. We're set up to do more track record, credibility, but then you are looking to take it to another level, which is where we come in. So think of expansion, but sustainable expansion that also has the impact behind it. And so that's how we think about it generally.
Sure. So if you think about the value proposition, what would be those areas that you say have to stick out? So if I look at an energy, for example, that's renewable energy.
Yeah.
What were the key considerations in terms of what is the value proposition from this business, and what is that significant value add that you would add to the business, mindful that at some point you would want to exit the business also?
Absolutely. So if you look at energy is, again, renewable energy business providing, solar systems to industries and residentials alike. We found that business very interesting in the sense that they started to look at renewable energy, solar, long before many of the other players started to look at it in Nigeria. We saw a sponsor, an entrepreneur who was very determined, ambitious, very hardworking, and had a plan, built a team as well, which is quite credible. But also, we also saw an opportunity to sort of get our investment to be a catalyst for other investors such as ourselves to see that space as somewhere where we should be deploying pools of capital. In terms of what we bring, we are set up to be a minority investor, which means that we would not go above 35% when we invest, right? So for us, we don't want to be too involved in the day-to-day, but we do want to have influence. Governance, for example, is a big one. ENS, gender. We need to have businesses in our region where we have a good, robust sense of female representation and leadership, and it's across board. Those are the items that we tend to prioritize when we think of our value add. In addition to that, we have something called a business support facility, which is sort of outside our key investment. It's like this little pocket of money. It's not little actually, but it's this pocket of money that allows us to fund other areas of the business that typically you'd not want the key or the core of the investment to go towards. So for example, with energy, some of that money has gone towards helping train management teams, especially the females on the team, and also supporting on other sort of back of house interesting items. So again, we see ourselves as a long-term partner. We want to improve governance. Nana would say a lot of times that 20, 30 years ago, we had businesses that looked quite strong and looked like they were in the right direction, but they don't exist anymore. We want to fix that. We want to build sustainable businesses that last longer after we are gone. And so that's the mindset that we have.
Sure, absolutely. So just to reiterate some of the things you've said or highlight. So the first one for you will be a credible sponsor.
Of course.
The second one will be the gender lens.
Yep.
The third one will, of course, be the robustness of the business plan.
Absolutely.
And then the impact that the business would have on the economy. Absolutely. I reckon that, and of course, governance. I think you mentioned governance.
Yep.
So governance for us continues to be one of the challenges for people in investing in Africa.
Yep.
But if I come back to the governance proposition that you mentioned, is it something that you would seek to consider post-deal, or would a business having the right governance, even at the point of investment, be some sort of criteria for you to invest in the business?
So we don't want to invest in perfect businesses. That's not what we are looking for.
Sure.
We are very, very mindful that the businesses that we have in the region today have their own unique journey. What we want to see in a partner is the willingness to do the right thing. And that's where we come in as a partner. And you have to be honest, doing the right thing, it takes time. It takes time, it takes skill, and it takes support, technical support. So, for example, Miniplast, for example, is family business, out of Ghana, existed over 30 years. They've always, run it as a, they do their board meetings at the kitchen table, right? But they also want to, get this business to last another 50, 100 years. And so very quickly, we are sort of restructuring how, governance, or what governance should look like, and the family is also willing. And so on all of these items that are important to us, we're not saying be perfect day one.
Sure.
But we're saying you have to be, let us sort of put together a path that allows it, allows us get there, essentially.
Sure. I think that's very, very useful in just mentioning, because that's one of the ways from discussing with different people on different episodes, just highlights the importance of private equity in helping businesses institutionalize.
Absolutely.
And helping them just stay the course of the time.
Absolutely.
Thank you for that, Obafemi. I wanted to speak to you about the challenges that you see investing in the region. You had mentioned the background of the key people in Norfund in West Africa, especially
Yep.
the West African office, the need for boots on the ground, and the fact that you are all local. So you, Nigerian, Nana, Ghanaian, and the Cameroonian team. So some of the challenges that we have heard from other players and other foreign investors may not be such that will apply to you because you have boots on the ground. But from your own perspective, what would you consider to be the top 3 key challenges to investing in the region?
I think that in our markets in West Africa, some of our markets are quite fragile and they react to sort of global trends and themes. And it's unfortunate, in many cases, some of the businesses that we are either partnering with currently or we want to partner with are exposed to some of those movements. If you look at, for example, the war in Ukraine, that greatly affected supply chain, especially in the food business. If you think about, the tariffs, for example, with some of the discussion on tariffs that we're seeing with the US and other countries, for example, it also has a multiplier effect on some of our markets. And so oftentimes we find ourselves in this position where we think we're going this way and then something on the global scene happens and then there's a little bit of a shift or a little bit of a pause to say, this could change the business model a bit, or this could change what performance looks like a bit. And so it's also navigating those types of conversations. I guess for that topic, for us, again, the mandate is to invest in developing economies, difficult countries. And so that separates us from some of our peers in the sense that we don't run away from a difficult situation. We try to take a step back and work with our partners, either existing or future partners, to see how we can navigate this type of headwinds. So for me, that is one. Our markets just react very quickly to what happens on the global scene. I think that, and I can maybe link it to number 1, is also other macroeconomic types of headwinds that are specific to some of these countries. In Nigeria, for example, and Ghana, it's been currency. Currency makes it really, really difficult. We report our returns in USD, for example. And so if some of our businesses or prospects are impacted by what happens on the currency situation. So for example, if you're not an export business, right? If you are a full Naira earning business and then the dollar moves, that means quite a big deal. I think another challenge is, just expectations. We, for example, like I said earlier, we were set up to do more mature sort of businesses. So you find that expectations are oftentimes not aligned. The businesses that we can actually invest in, that have the size, that fit our mandates, fit one of our sectors or multiple sectors, they also have quite a number of investors looking at them as well. And so we often get to that point where, we want to start a conversation is very far off from where they would, so it's also trying to align expectation. And sometimes even those expectations, they shift. So this could also be, a big challenge. I think timelines is a big deal. When we do these types of transactions, everybody says they are ready. I think we try to be proactive and say it's going to take a bit longer. But these transactions really distract management teams. They're exhausting, they're expensive. And so it's difficult trying to sort of start when you say you would start and finish when you say you would finish. And so navigating and aligning on timelines too is oftentimes a challenge as well.
Sure, thank you so much. So those be 4 top challenges you've mentioned. The first is the global shocks, the impact global shocks have on our macro economy. I think directly linked, you've linked it nicely, is the general macroeconomic challenges that we have in West Africa, especially the currency risk. The third you mentioned is the expectation, and I reckon expectation then ties back to the valuation.
Absolutely.
The
pricing.
The pricing is just a bit off between what it is you're willing to pay and what the sponsors are looking at. And then the fourth is the timeline to close the transaction.
Exactly.
In all this that you have mentioned, what would be your strategy to some of those ones? And I think for me, the major one would be around the currency risk. We've seen from experience or from speaking to a few of the speakers in the last episodes, people are gravitating towards investing more in the Francophone West Africa, where because of the peg to the euro, there's a bit of a hedge for them. How do you see that impacting the West African transactions, especially in the Anglophone markets?
No, I think, of course, Francophone has, an easier conversation when it comes to currency. But, as important as Francophone is to us, those markets are also quite small, right? So at the end of the day, fine, it's an easier conversation on the Francophone side. Countries like Nigeria, for example, I think we try to have conversations with businesses that are either into exports already or are considering exports as some sort of growth area. And that is how we have to think in the region, especially in a country like Nigeria, where we are blessed right, left, and center, right? Exports gives you some sort of hedge. And I think it's as simple as that. So you're either thinking of some sort of export play, or you are growing faster than the currency depreciation or devaluation of whatever you want to call it. And these companies do exist. Some of our portfolio companies, for example, are growing faster than the currency, which is just amazing. Others are thinking about an export play or just generally diversifying their offering. Now, you've got to be careful, with exports, because that also comes with its own challenges. But we're also seeing businesses in Nigeria, in Ghana, seeing themselves less as a Ghana or a Nigeria business or an Ivorian business. We're seeing people start to see themselves as regional businesses, right? Which doesn't only help with the currency situation, but even for us, we also have to think of what an exit looks like. There's an advantage to exiting a regional business versus, a country-specific business. Look, I think for us, we've tried and are still trying to think about how, we can solve for currency. It's an ongoing discussion. We've had many conversations around we can do. In Nigeria, for example, we can do debt and equity as from an instrument perspective. On the debt side, we do not do local currency today, but it's something that we want to explore. So again, we look for businesses that fit our mandate, but can also take USD and return USD, I would say.
Yeah, sure. I mean, no doubt Nigeria continues to be the biggest market
Yep.
in sub-Saharan Africa. I reckon we just have to figure out how to get our macros working in the right direction, but
Absolutely.
also more than anything, the stability of the currency, very important for investors who are investing, who are taking currency risk to invest in,
Yep.
in foreign currency terms in Nigeria. Based on the challenges that you see in the region, the great work that Norfund is doing across the portfolio companies, what do you see your exit strategy, or how do you see the exit strategy? I don't know if you have exited any of your portfolios, if you may want to talk about that. But when you are considering exiting, which is another challenge. So we have this, I don't know if I mentioned earlier, we do this thought leadership, I'm sure you would have
Yep.
seen it, doing deals in sub-Saharan Africa. And when we ask some of the questions and challenges around investing in Africa, one of the areas that continues to resonate is exit challenges
Yep.
for the foreign investors.
Yep.
I'm not sure if you've exited any portfolio in recent time, but is that something that you have thought about even for your portfolio? And what are some of the strategies that you have put in place or that you plan to have in place?
No, I think when we, as part of our investment process, the exit conversation is very core to it. Our investment committee, leadership within Norfund are very keen on what that looks like. We're fully funded by the Norwegian government, which is our owner, but we also have to recycle cash, right? And we have to prove that the mandate makes sense and it's working. I think we've actually exited 1 or 2 deals in Nigeria. We provided a loan, for example, to our site that has been fully repaid a few years ago. And I think we have 1 or 2 portfolio companies that we will have to start thinking about what an exit looks like shortly. Again, the West Africa office was set up in 2017, so I think it's still kind of early stages for us. We're the youngest regional office for Norfund. But I think when you just think about what exit mechanisms look like, for example, most of the businesses that we support today are family-owned, family-run businesses who see the value in having a Norfund, a credible Scandinavian DFI, partner with them, improve their operations, processes, governance, and all of those things. They're happy for us to exit back to them. So a lot of the conversations we've had with some of these families is they would buy us out. We also see opportunities to exit to other financial sponsors who also appreciate the value that a DFI such as ourselves brings to businesses in the region. So it is sort of exiting to owners, exiting to financial sponsors as well, and even strategics alike. I mean, I would say, listing those businesses or the capital markets is also one area that could be interesting. But I think the capital market, especially in Nigeria, has evolved and has grown a great deal, but there's still a little bit of robustness that is required to make that even a more attractive option, I would say.
Sure. Absolutely. I mean, that's another topic on its own.
Yeah.
The depth and the attractiveness of the
course.
Capital markets as an exit strategy. At the last year's AFCA, it was something that was extensively discussed by different parties. And you're right, Nigeria's NGX now has evolved over time. And we continue to still see it deepen with new listings and etc. So we hope that that's something that we expect that in the near future, we would see exits via the capital markets in terms of public listing. Based on all that you have said, Oba, what would you say would the key themes, maybe you can list the 3 top themes that would shape your approach to future investments in the region?
When I think about the themes that come to mind, on future investments, it's backing the right team. At the end of the day, I think the team is core to whatever happens. When things move around, when things are working, when things aren't working, it's the team that you rely on. That's where you get your energy. Partnering with the right teams is very, very important. A business model that works and can be scaled and is sustainable is also very, very important. I think understanding the sector, especially regulation around that sector, is also very, very critical. And fine, I mean, on that point, it might not be perfect today. For example, regulation should always continue to evolve, but there needs to be some comfort that people know what they are doing, and people know what to prioritize and what not. And I think finally it's also the willingness to adapt to some of these topics that are still kind of new for us in the region. For example, climate. We are prioritizing net zero, for example. Our businesses, especially in the region, need to start thinking about what does the impact of your operations, what does that do to the environment? Gender equality is very, very key. And so we are starting to prioritize some of these topics. And then we also hope that our co-investors and other like-minded investors as well make it topical.
Sure, thank you. So just to highlight the 4 key areas that I understood, the first is the right team. The second is the scalability of the business. Of course, the robustness of the business will closely tie to that. The third is understanding of the sector and the regulatory environment.
Exactly.
I think I would have a question on that particular one.
Sure.
And the last is the sustainability and the gender lens, and which are the things that we see from a futuristic point of view. Those are the key considerations for investments. If I come back to the macro environment and the regulatory environment for Nigeria and Ghana, the Anglophone West African countries, how would you say how would you assess the regulatory environment and the impacts it has had on your investments currently, and the way you see that regulatory environment shape for the future?
Of course, it depends on sector, right? So we probably don't want to go sector by sector. But I think that for some sectors, it's definitely stronger than others, and that helps. I think, for example, on the financial services, or as we call it, financial inclusion sector, you will find that regulatory environments across the region is a little bit more mature than others, which helps. I think that in general, the regulatory environment in the region continues to evolve. We're seeing a lot of activity and willingness in all the countries that we are present in to get up to standard or global standard. For example, if you look at, we invested a couple years ago in a recycling business here in Nigeria called Recyclers. At the time that we were talking to the sponsors, there was almost no regulation, almost. Pockets here and there, right? But almost nothing really tangible. Today, state and federal government regulation is looking a little bit more concrete. And we see a lot of work being done. For example, a state like Lagos State is doing a lot of work around the circularity of its economy. And we're hoping that as people continue to see green infrastructure as a sector to invest in, and the importance that it has for our future, that the regulatory environment will be a backbone towards it. And it's happening, and that's encouraging. For us, we try to, through our embassy here in Nigeria and in Ghana as well, engage the government on how to think about these things and provide suggestions, etc. For example, the Norwegian embassy in Nigeria is very, very active on some of these conversations, leveraging the experience not only from Norway, but some of the other countries that we have missions in, and also tying us into those conversations. And it's been very useful.
Sure. Very, very interesting conversation. I would like to ask the last question for me would be, what would be your advice to investors who want to do deals in the region, who don't have boots on ground, and who don't have any experience investing in the region?
Partner. That's what comes to mind. We have boots on the ground and we still partner, because believe it or not, having boots on the ground is still not enough. We are very, very keen on partnerships. We're very keen on learning from each other. Also, I would say diligencing, working with folks like yourselves, KPMG, I would say it's a smart thing to do. Folks like yourselves also have a way of looking at it maybe a bit differently than we do. And you've been here for many, many years. Sure. So it's also not just partnering with like-minded investors, partnering with consultants as yourself, and asking questions and being open to learning and trying to figure exactly what you want to do is key. I think for us as well, we are very, very focused on what we can and cannot do. Because things move around in our regions quite a bit, I think in being intentional on what you can do, for us it's 4 sectors.
Sure.
You know what I mean? So it's 4 sectors. We're intentional about the types of businesses that we can, the stages of growth that we want you to be at and what it can become. So also being intentional on your mandate, I would say, is very, very critical, because if you do every and anything,
Sure.
you can also make mistakes.
Sure. Thank you very much, Obafemi. Being intentional about your mandate, being intentional about the impact that you want to achieve. Obafemi, I don't know if you have anything else you want to add.
First of all, thank you once again for inviting me. For us as Norfund, we are very excited about what's happening in the region. We are committed to the region as well. We do appreciate that there are challenges, but with challenges comes interesting solutions and invention and innovation. And we want to be part of that conversation. We want to be part of the growth in the region. We've invested quite considerably in Nigeria, Ghana, and across our other markets in the Francophone, and we are set up to do more.
Sure.
And so we're looking forward to, future. We're looking forward to partnering with folks like yourselves and others. And I'm happy to be here. So thank you so much.
Thank you. Thank you so much, Obafemi. It's our pleasure, actually. So the pleasure is all ours. Thank you for making out the time to be here. Thank you for sharing your experience. And thank you for recognizing the value that we bring to the table on your transactions. It's been a pleasure hosting the podcast. Thank you to our guests. Thank you to the team for putting this together. Have a good day. Thank you.